Uh, Hi, good afternoon, students. In today's session, we are going to discuss about the solving of the problems when there was unrealized rent, but no vacancy period. That is the second situation, and third situation where there is a vacancy, but there is no unrealized rent. So, these are the two situations that which we are going to calculate in the today's sum. That would be now if you look at Mr. Sandhya, 45 years age, own a house which was let out to Mrs. Devi on a rent of 10,000 per month. Municipal value is 1 lakh. FRV is 1 lakh 10,000. Standard rent is also being given. Mrs. Devi did not pay the rent for July and so was made to vacate on 31st 7 2019. On 1st August, again, I mean here she didn't pay for July month. That July month is called as unrealized rent. Correct? Yes, guys, is it right?
Yes,
Yes,
sir.
sir.
Yeah. And on 1st August, she let out to Mrs. Shanti on a rent of 9,000 per month. Now, expenses incurred during the previous year are repairs 8,000, municipal taxes. 15,000, interest on loan taken to construct the house is 72,000. Calculate the income from house property. So here there is a house. She didn't pay the house for the July month, hence we call it as unrealized rent, and we made her to vacate. As we made her to vacate, then after that there is no vacancy. That means just there is only unrealized rent. Is it perfect? Is it clear in understanding the sum, or any doubts, guys? Yeah.
Clear, sir.
Okay. So now, as we know, is that normal, we will keep heading the solution computation of Mrs. Sandhya's income, uh, Sandhya's income from house property for the current assessment year. This is the standard format that we are going to write. Particulars, GAV minus municipal tax, we get NAV, then standard deductions under section 24, standard deduction 24A, interest on loan 24B, then you get either income or loss from house property. So first thing, what we have to do, we have to calculate in the working note, step number 1, calculation of ERV. Calculation of ERV, that is nothing but expected rental value, whichever is higher from the following. Now, here he has already given MRV is 1 lakh, FRV is 1 lakh 10,000. So MRV is 1 lakh. Yeah, you are right. And
FRV is 110.
FRV is rupees 1 lakh 10,000.
So we
Okay.
should consider 110.
Yeah. So as the FRV is higher, we take ERV is rupees 1 lakh 1 lakh 10,000 rupees. Okay. Now step 2, we will limit the ERV if there is SRV. Now is there a SRV is given in the problem? Yes. SRV is 75,000 is said. If
Yes,
we
sir.
will, whichever is lower, step number 2, we will adjust ERV, whichever is lower. ERV, which we already calculated in the step number 1, is 1 lakh 10,000, and SRV is
75.
rupees 25,000. Okay, so therefore, now here whichever is lower, right?
75 is
Whichever
the
is
ERV.
yeah, so AERV or adjusted ERV. It is not ERV, it is adjusted ERV. That is 75,000 rupees. Okay? 75,000 rupees. Now, in this problem, there is now you directly you cannot go to the calculation of GAV in the step 3 because there is an unrealized rent. You should calculate or calculation of ARV. Nothing but annual rental value, annual rental value, calculation of ARV. So here ARV, there is two ARVs are there. Actually, if you look at, we gave on a monthly rental for 10,000 per month, correct? And she made to vacate on 31st/7/2019. So that means from 1st April to 31st/7 means April, May, June, July. So on the basis of June, July for 4 months, right? So actually the annual rental or the rent per month from 1st April 2019 to 31/7/2019 is how many months it is becoming? April, May, June, July, 4 months. 4 months, right? So rupees 10,000 into 4 months. So that is equal to rupees 40,000. Okay, rupees 40,000. Rupees 40,000. And again, there is also rent which we have to calculate for remaining period, for which we gave it on the basis of 9,000 rupees per month, correct? From 1st August, we gave it on a rent for 9,000 rupees per month. So rent per month from 1/8/2019 to 31st March 2020. So how many months it is becoming? Is it 8 months? Guys, are you with me?
8 months, sir.
8 months. So 9,000 into 8, that is equal to rupees 72,000 rupees. Okay. So the total ARV is equal to, annual rental is equal to rupees 40,000 plus 40,000 plus 72,000, which is equal to rupees 1,12,000. This is the ARV, annual rental value. Am I right?
Yes, sir.
Yeah. Now we have to calculate. Now this is the actual rental value, but in fact, in this, have we received the July month amount? No, right?
No, sir.
So now 1,12,000 minus the rent amount which I have not received for July month to June. Okay. So July she didn't pay, so we have vacated. So we have to deduct. We didn't receive this amount.
1,02,000.
So rupees 1,02,000 is the actual rental value for the current assessment here. Okay. Now you have to calculate step 4. Step 4 is calculation of GAV, calculation of gross annual value, which we call as gross annual value, whichever is higher, from following. Okay, whichever is higher from following, that is AERV, which is equal to, which we calculated, rupees 75,000, or then ARV, which is equal to rupees 1,02,000, correct? Yes. So
Yes, sir.
whichever is higher. So whichever is higher is ARV is 1,02,000 rupees. Therefore, hence, your
GAV is 1,02,000.
yeah, hence GAV is equal to 1,02,000 rupees. So this figure, this 1,02,000, we are going to put now in the solution as 1,02,000. And municipal taxes. How much is the municipal taxes?
15,000 minus.
15,000 rupees, right? So, so when you deduct from 1,02,000, 15,000 rupees. So what is the amount that we are going to come for? Is it 87,000?
Yes, sir, 87,000.
87,000. Now this is NAV is 87,000. Okay. Now we have to calculate the working
Loan.
notes. Is it working notes? The or the GAV. Sorry. We have to calculate the standard deduction. Working notes to calculation of standard deduction under section 24. So NAV into 30%. NAV, how much we got now?
1,02,000 into 30%.
NAV is 1,02,000.
Sorry.
87,000.
87,000, yeah.
87,000 into 30%.
26,100.
30.
26,100.
Okay. 26,100. 26,100. So this 26,100, we have to write here 26,100. And interest on loan, is there any interest on loan has been taken and paid? Yes. Interest on loan is 72,000 as per the problem, correct? Yes, guys, are you with me? Hello?
Yes, sir.
Yes, now we can hear you.
Yeah, 72,000. Interest on loan is 72,000. So when interest on, now how much is the total amount? Both of these two amounts, is it 98,100?
98,100.
Yeah, 98,100. So is it income or loss from house property? Yeah.
Loss 11,100.
Yeah, loss from house property is 11,100. So loss on house property, income or loss, you can write like this, or if you want to be more specific, you can write like this also, loss on house property or loss from house property. So 11,100 is what we have calculated when there was the unrealized rent, and you know it very well. When we call it as unrealized rent, we will make all efforts to realize the rent, but there is no use. We cannot collect any rent from particular person or from particular the tenant because of his poor working conditions or etc. Hence, we call as unrealized rent. So this is how we have to solve when the only when there is unrealized rent when we have the in the sum. Okay. So now we are going to look at the other sum which involves the both ARV as well as the vacancy. When both are there, I think, let me see that. Vishal Maheshwari owns a house whose municipal value is rupees 1,40,000. FRV is 1,38,000, and annual rental value is 1,80,000. Okay, the tenant could not pay the rent for the month of February, and so he was made to vacate the house. That means there is unrealized rent. Am I right, Ojas and Karan?
Yes, sir.
Yeah, and the house remained vacant for the March. So that means there is also vacancies there here. So there is unrealized rent, there is vacancy. Two are there in single sum. Okay, and as per rental deed, the municipal taxes are to be borne by the tenant, but Srimati Parameshwari failed to pay such dues were paid by the owner. Municipal tax is at 15%, interest on loan 40,000, which is loan taken for repairs. Yeah, when you have taken a loan either to construct a house or for repairs, then also for both of them, we are going to give a deduction under section 24. Okay, so this is the sum, and now let us we solve the sum. As you know, the standard format that which we have to put it, as we know that we have to put the standard format, and that I've did it. So solution is computation of whose income, Mr. Vishal
Maheshwari.
Maheshwari's income, Vishal Maheshwari's income from house property for the current assessment year. So GAV minus municipal tax NAV, this is the standard format. Okay. And now we are going to calculate the working notes. Again, we have to calculate the working notes. Now we will let us copy that working notes here. Okay. So when it comes to the working notes, as we know, that first one we have to calculate is ERV, correct? ERV and FRV, how much is given in the sum? Can you guys tell me quickly how much is ERV? I mean, how much is the MRV and how much is FRV? Yes, guys. MRV is 1 lakh.
So MRV is 1 lakh
1,40,000 and FRV is 1,38,000.
38,000.
Okay, so MRV is 1,40,000
And 138.
1,40,000, or FRV is equal to 1,38,000. Okay, so but here MRV is more here, so that is MRV is more. Okay, so as MRV is more, let us we highlight on MRV, whichever is higher. So ARV is equal to ERV is equal to 1,40,000. Second one, adjusting ERV. So first one we are going to take ERV. ERV, which already calculated, is 1,40,000. And SRV. Yeah, standard rental value. Did he give in the sum the standard rental value?
No.
It didn't give the standard rental value.
So
when there is
140 only.
So when there is SRV is nil, actually you need not do this step also. You can directly do here. However, even you can do it. So you can't keep the zero. Nil means whichever is lower means zero. You cannot take. So the ER itself is going to become AERV. Correct. So
yes,
now 1,40,000 will be the 1,40,000 will be the AERV. Now, third step, you should calculate ARV. Okay, so that is ARV. Is there anything to calculate, or did he give the sum directly? How much he gave the ARV, annual rental value? 1,80,000, right?
Yes, sir.
1,80,000. So calculation of, let us we take ARV, calculation of ARV as per the problem. As per the problem, ARV is equal to ARV is equal to rupees 1,80,000. This is for 12 months, if I'm not wrong. Yes, guys.
Yes, sir, for 12 months.
So 12 months. So per month it is coming 15,000 per month. Okay. So in this sum, he mentioned it that the tenant could not pay the rent for the month February, and so he made to vacate the house. and house was remained vacant for March also. So for there was 1 year unrealized rent, 1 year there was a vacancy, correct? So now ARV is equal to rupees 1,80,000. That is per month when you take it is 15,000 per month. So here when you want to calculate the ARV is equal to when there is rupees 1,80,000 minus 15,000 rupees for unrealized rent. Okay, and when there is both are there, that is vacancy and unrealized both are there, both should not be deducted at a time from ARV. So then in such a scenario, it is becoming rupees 1,65,000. So ARV is 1,65,000. When there is 1,65,000, now we have to calculate, as there is vacancy involved, we should calculate adjusted ARV. Adjusted ARV when there is vacancy. If there is no vacancy, we will calculate directly ARV is equal to whatever how many per month you have given rent into say 15,000 into 12, 1,80,000. If any unrealized rent is there, minus, otherwise 0. So that will become your annual rental value, 1,65,000. But because there is a vacancy is involved, now you have to minus that vacancy also. But both at a time you should not deduct. You have to see whether adjusted ERV is less comparing with ERV. Is it because of vacancy? If it is because of vacancy, then the GAV is going to become ERV. If the adjusted, that we will see it when the in the problem, when you do it, you will come to know it. Okay, now adjusted ERV is equal to rupees 1,65,000 minus vacancy period. 1 month is the vacancy, right? Am I right, guys? Are you with me, guys?
Yes, sir.
Okay, vacancy period. So that is equal to rupees 1,50,000, correct? 1,50,000 is the adjusted ERV. Now we have got the ERV is 1,40,000. Okay, so here you should calculate the in order to find the GAV, whichever is higher from the following. Here you have to take ERV or AERV, whatever it may be, ERV or AERV. AERV or AERV is rupees 1,40,000, correct? Guys, are you with me?
Yes, sir.
So in the second step, we calculated in step number 2, AERV. We are ERV, AERV, both are same when there is no standard rent, correct?
Yes, sir.
So that's the reason I'm writing is ERV or AERV is 1,40,000. Now ARV is equal to, here you cannot call as ARV. You should call it as adjusted, okay, adjusted ARV. That is, in the year we did adjustment and we got is 1,50,000. Okay, 1,50,000. So in such a scenario, in here, whichever is higher, we said. Now between these two, whichever is higher, 1,50,000. Am I right? So 1 lakh, guys, are you with me?
Yes, sir.
Yes, sir.
Any doubts?
No, sir.
No, sir.
1,50,000, whichever is higher. Here, that I was trying to tell you. Suppose if in the same given problem, after making all these, suppose instead of 1,50,000, after deducting the vacancy, if it would have been 1,30,000, if it is 1,30,000, 30,000, then directly this GAV is going to become 1,30,000. This fourth step you need not put. Directly here you have to write, because the ARV cannot be more than ERV, hence GAV is equal to ARV. Suppose here when it is 1,30,000, but here as it is adjusted ARV or annual rental value after deducting unrealized rent and after deducting vacancy period, both still this ARV is more than ERV. When ARV is more than ERV, GAV is going to take whichever is higher. Suppose if this 1,50,000 becomes 1,30,000, then GAV is going to become 1,30,000, but not 1,40,000. So this point you have to remember very clearly. Okay. So now GAV is 1,50,000, and as per that, and how much is the municipal tax? Municipal tax is 15%. But what he said, as per the rental deed, municipal taxes are to be burned by the tenant. But tenant failed to pay those dues, hence that is municipal tax 15% paid by the owner. Now, as the owner paid, should we deduct the municipal taxes or not? Yes, guys, should we deduct or not? Quickly.
No, sir.
We should not deduct, because as in the sum, it is very clearly mentioning when as per the rental value, if the tenant has to pay, then you cannot deduct from GAV the municipal taxes, even if it is burned by the owner. So now NAV has become 1,50,000. Now standard deduction, as we know that standard deduction 1,50,000 into 30%. Okay, 1,50,000 into 30%. How much it is going to become? Is it 45,000? Guys, 1,50,000 into 30%. Standard deduction 30%. Yes. Any doubts? Why there is no response?
No doubt, sir.
Yeah. So when it is 30% of NAV, 1,50,000 into 30%, that is becoming as 45,000, and the interest on loan is 40,000. When interest on loan is 40,000, then which has taken for repairs should be allowed as a deduction. So that is going to become 40,000. So the total deductions eligible is 85,000. Correct? The total
Yes, sir.
deduction eligible is 85,000. So from 1,50,000, when you deduct 85,000, I think what is the amount? Is it 65,000? If I'm not wrong, 65,000.
Yes,
so
Yes,
is
sir,
is it income or loss? It's a
It is income.
It's the income from house property. So income from house property is 65,000. So this is very, very important thing that what you have to remember when you are calculating GAV when there is vacancy period. When there is a vacancy period. When there is a vacancy period, you have to calculate ARV separate. First, for total full years, how much is the ARV? 1,80,000. That we did it. I divided by 12 in order to know what is the month rent. Then I've taken ARV is 1,80,000. From that unrealized rent, I have minused it. So then we got 1,65,000. So what we call as ARV, this is annual rental value after deducting unrealized rent. Now there is a vacancy. That means this annual rental value has to adjusted further. Hence we call it as adjusted annual rental value. That 1,65,000 minus 15,000, because one more month there was a vacant. So now it has become 1,50,000. So annual rental value is 1,50,000. Whenever there is like annualized the unrealized rent, or whenever there is the vacancy period, this step 3 you have to calculate. Then step 4, you should go for gross annual value. So this is very, very important, guys. That's the reason, again, once again, I'm repeating it. So when there is standard rent, we will calculate AERV. If there is no standard rent, ERV is ERV or SRV, both is going to become same. So both you have to compare. Now, when ERV should be more than more than annual rental value. If it is more than annual rental value, ERV is going to become GAV. But when ARV is more than ERV or ARV, then ARV is going to be GAV. This point you have to keep it in your mind when you are calculating the sums on the when there is unrealized rent and when there is a vacancy of the house. Okay, so this is very, very important, which you have to remember when you are calculating income from house property. Okay.